Listen to me. Wake up, everybody. Look at me. If you are about to retire, or if you have already retired, I want you to pause whatever you are doing and listen to me right now. Because today, we are talking about your health, your money, and how a single, uneducated decision regarding Medicare could literally wipe out everything you have worked your entire life to save. I am not exaggerating. I see it happen all the time, and it breaks my heart. You think you are safe because you have Medicare? You say to yourself, Susie, I turned 65, I'm on the government plan, I am good to go. Oh, no, you are not. Original Medicare, Part A and Part B, is not a bulletproof shield. It is a sieve. It has massive, gaping holes. Do you know that under Original Medicare Part B, you are responsible for 20% of your medical costs? 20%. And guess what? There is no limit. There is no out-of-pocket maximum. If you get seriously ill, if you need a treatment that costs $100,000, your share is 20%. That is $20,000 out of your pocket. If the treatment costs $500,000, you owe $100,000. Are you kidding me? Where are you going to get that money? Are you going to take it out of your retirement accounts, pay taxes on it, and deplete your nest egg when you are 75 or 80 years old? No! We are not going to let that happen. This is where the fear creeps in, and I know you feel it. You are terrified of getting sick, not just because of the illness itself, but because of what the bills will do to your spouse, your children, and your peace of mind. You want security. You want to know that if you have to go to the doctor or the hospital, you aren't going to get hit with a bill that causes your blood pressure to skyrocket. So, what is the solution? The solution is Medicare Supplement Insurance, which everyone calls Medigap. Now, what is Medigap exactly? It is private insurance that you buy to stand right next to your original Medicare and pay that 20% coinsurance, those deductibles, and those copayments that Medicare leaves behind. It literally plugs the gaps. But here is the problem: when you start looking into buying a Medigap policy, you are going to get buried in an absolute mountain of confusion. You are going to get phone calls from brokers, piles of junk mail, and flashy commercials on TV trying to sell you this plan or that plan. And you ask yourself, how do I buy this? How do I know I'm not getting ripped off? Let's break it down right now, simply and clearly, so you can be strong, smart, and secure. First, you must understand that Medigap plans are standardized by the federal government. They are labeled by letters: Plan A, Plan B, Plan G, Plan N, and so on. This is the most important thing you will learn today. A Plan G sold by Company X has the exact same medical benefits as a Plan G sold by Company Y or Company Z, exactly the same. The government mandates it. A Plan G is a Plan G is a Plan G. They cannot change the coverage. So, if the benefits are identical, what is the only difference between these companies? The premium. The price they charge you. One company might charge you $150 a month for a Plan G, while another company charges you $250 a month for the exact same Plan G. If you buy the expensive one because you think a bigger name means better coverage, you are throwing your hard-earned money straight down the drain. So, which plan should you look at? For anyone newly eligible for Medicare, the gold standard right now is Plan G. Why? Because Plan G covers almost everything. It covers your Part A hospital deductible, it covers that terrifying 20% Part B coinsurance, and it covers your skilled nursing facility care. The only thing it does not cover is the small Part B annual deductible, which is just a couple $100. Once you pay that small deductible yourself, Plan G kicks in and covers 100% of your Medicare-approved medical bills for the rest of the year. Imagine the peace of mind that gives you. You go to the doctor, you show your Medicare card and your Plan G card, and you walk out paying absolutely nothing. Those commercials tell me I can get a plan for $0 a month, and they throw in dental vision and gym memberships. Why should I pay a premium for Medigap when Medicare Advantage is free? Listen to me very carefully. There is no such thing as a free lunch in financial planning, and there is certainly no such thing as free healthcare. Medicare Advantage is not original Medicare. It is private managed care, like an HMO or a PPO. When you choose Medicare Advantage, you are opting out of the government program and letting a private insurance company manage your care. Yes, the monthly premium might be zero or very low, but you are giving up your freedom. You have to use their network of doctors. If your favorite doctor leaves the network, too bad. If you get sick and want to see a top specialist across the country, you can't, unless you pay for it entirely out of your own pocket. Step number 2, decide on the plan letter that fits your risk tolerance. For 90% of you, that is going to be Plan G. Step number 3, shop the market. Get quotes for that specific plan letter from multiple insurance companies in your zip code. Ask them how they price their policies. You want to ask if the policy is community rated, issue age rated, or attained age rated. This matters because it determines how your premiums will rise as you get older. Attained age plans start cheap but go up every single year as you age, which can become incredibly expensive when you are in your 80s and on a fixed income. Issue age or community-rated plans are much more stable over the long term. Step number 4, check the financial stability of the insurance company. Look at their rating from independent agencies like AM Best or Weiss ratings. You want a company with an A rating or higher, because you need to know that this company is going to be financially sound and able to pay your claims 10, 15, or 20 years down the road. Do not let fear freeze you into doing nothing, and do not let greed lead you into a $0 trap that exposes you to massive financial risk later in life. Be disciplined. Invest the money in a solid Medigap policy today so that you can protect your wealth, protect your health, and enjoy the retirement you worked so incredibly hard to build. You can do this. Stay safe, stay smart, and stay secure.